Hi, I'm Patu from freefincal, and if you want to earn a little more return than a liquid fund or an overnight fund, then you can try this fund that I recommend in my plumb line list of mutual funds, Franklin India Savings Fund. Naturally, if you want a little more return on the debt space, you have to take on more risk. So this fund will have a little more risk compared to a liquid fund or a an overnight fund. But the risks are relatively low and fairly manageable if you choose your duration right. So this is what they call as a money market fund. So this will invest in the money market. The money market is considered to be slightly different from the bond market because the money market is a place where people look for I think I'm going to sneeze. Sorry. The money market is a place where people look for cash in the short term. They want quick liquidity. So the structure of the products will be different from typical bonds, and the interest payment schedule or the interest payment manner will be different. So there is a list of money market instruments that are approved by SEBI, and they are commercial papers, commercial bills, treasury bills, government securities with a maturity of less than 1 year, 1 year or less than 1 year. Call money or notice money. These are money that's traded between institutions, especially typically banks. Certificate of deposits, short-term gilts like repos, reverse repos, tri-party repos, etc., etc., and any other instruments that are usually approved as a money market instrument by the RBI or by the RBI typically. So this means that they will invest in short-term bonds, and the bond will have a maturity of few months to less than a year. So you can look at, if you go to the value research fund page, the first thing I want you to look at when it comes to debt funds, don't look at the performance, don't look at the stars, never look at the stars. First, look at the portfolio. So you can see that the modified duration is about 0.6 years, average maturity is close to that, the yield to maturity is about 7.24%. People make the mistake, I've said this before, people make the mistake of looking at the yield to maturity and assuming that's the expected return. That is wrong. The yield to maturity is a measure of risk. If I see a yield to maturity of 6%, that is a little bit less than current fixed deposits, then I can more or less say that fairly say, without looking at the portfolio, that the fund is investing in safe bonds. This is about 7.2%. I think it's still reasonably safe. If it is 9% or 10% or something like that, the fund is investing in extremely risky bonds. So yield to maturity is a measure of risk. It is not a measure of return. Don't make that mistake as well. The average maturity tells you, both the average maturity and the modified duration tell you how much the NAV of the fund can move up or move down for 1% change in interest rate. So you can see it's for about 1% change in interest rate, it will move up or down by about less than 1%. So that's 0.6 and so on. So it's fairly all right. That's acceptable. And if you look at the portfolio, it's pretty much all, currently it's all pretty much A1 plus bonds. You can see the bonds here, or you can go here. The full portfolio is here. The current full portfolio is here. You can get the file from Franklin, or you can just have a look at it. Of course, this is only the current portfolio. The ratings can go down if there's a problem, or the fund manager may choose to invest in slightly more riskier bonds. But still it will be money market, it will be short term and so on. You have to bear that risk when you invest in this fund. Of course, being for a Franklin fund, this is a very, very different kind of fund. You notice that it's got only 1,400 crores. Other Franklin funds, it has got a USD fund, ultra short term fund, which is like many people believe it can go wrong. That's like believing that a batsman will come every time and hit a century. But this is a much more sedate fund. This is what I recommend as an ultra short term fund, and you can use this fund when your holding period is more than 1 year, not less than 1 year. It will be risky then. For more than 1 year, for any more than 1 year to 10 years to 100 years, it can be held. It's not a, that's what I mean. Not literally, but that's what I mean. Above 1 year, it's fairly all right. Longer the tenure, the better off you are. And if you look at the performance, you must be very clear that in your mind that this performance can have this upticks or down small. You can see a small downtick here, small uptick here. Whenever there's a credit, whenever there's a capital gain or there's a credit upgrade. Sometimes the fund manager can sell these bonds mid-term and get a capital gain. So that capital gain will be reflected in the NAV as a small up, or there can be a capital loss. It can go down. Notice that the NAV here. Can you see this period here? Maybe in 6 months you can see. Maybe 3 months. I'm not sure. Okay, maybe here you can see this small. I can't see this here. You can see the small period here where the NAV is more or less horizontal. So there'll be periods like that. You have to accept that. If you the past returns, you should not go too much into the past because it was called Franklin India Savings Plus Fund. I don't remember the kind of bonds it could hold then, but it was fairly similar, I would say. It has managed about 7% return, which is like almost 1% more than a liquid fund you can manage. Typically, whenever the liquid funds themselves are giving 6%, during situations where the liquid fund is giving 7%, 7.5%, certain periods when the interest rate is high, then this fund may give you a little more, depending on the economic conditions at that time. But please recognize that the returns can fluctuate quite a bit, but it is what I would say a lesser evil. So if you can understand that spirit and appreciate it, you can get slightly more returns than a liquid fund using this fund. It's a low risk, ultra short term fund in my opinion, in my perception. Of course, it's technically classified as a money market fund, but that doesn't really make a big difference. So you read more about it, learn more about it, look at the resources at Franklin, and then make a call. So that's what I wanted to say in this video. I'll catch you again in another. Bye-bye.